How's it going, everyone? RoyalFlush here. Welcome to my meter management, not financial advice. Again, don't fall for any of the spam in the comments. Any of the information from this video is not advice to buy, hold, or sell any stocks or crypto. Don't fall for any of the spam in the comments. Take some good notes and let's have some fun. So, today's topic is basic investing into a stock. So I feel like I needed to make this because while I do want to jump into some more advanced topics, I understand there's a good handful of people who are actually just absolutely new to investing. So I feel like it's important to cover the basics here, and what other way than to cover the basics than just explaining basic investing. So we'll start on like a very basic level, not even talking about stocks. We'll just talk about things that you like to buy, specifically things that you might really like and enjoy. So for me, for example, my main purpose for streaming originally was for fighting games. Da 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 is my fight stick on my Cat's DE. I've upgraded this thing like so many times. Artwork, buttons, joystick, circuit boards, whatever I have on here, the new tricks, extra buttons, switches, yada yada. Oh yeah, and this bottom part from the Tekken Tag 2 stick. There's that. That's for my enjoyment. I do like fighting games still. I still compete, still play. What about my laptop here? I stream off my laptop. I got it from Costco. It cost me like a good $1,200 at the time I bought it. I think it's gone down in price ever since then, and of course there have been other versions of it, but I use it for tracking stocks, just making videos, streaming, so it's really useful. And I guess I could talk about my car too. Well, it's technically my third car. I've had, I need my car to go to work. I go places, I like traveling a bit, so of course I need a car. It's my third one, and literally the other two were both involved in accidents, but somehow I've been able to make it through having a third car, and it does what it's supposed to. It takes me places. Those are three things that are all really important to me. We have a bit of a diagram here, and it shows the types of assets that exist, and it either falls under appreciating assets and depreciating assets, and whether they're unproductive or productive. There's a couple of things about this thing that I don't personally agree with, but like I might put car in productive because it does allow you to make money, but in a ways, let's focus on the important parts. Most things that we buy fall under the, unfortunately, sorry, I got bad news for you. They fall under the depreciating asset. So that means the moment you buy it, it's kind of finite in its usage. I mean, you'll have usage for it. You might spend it on something, or it might be necessary for a living, or I guess even for your own entertainment. But what it comes down to is that after a while, it will lose value. I mean, like take for my fight stick, for example. I've upgraded it, so I've added to its value, but its overall value will probably stop at a certain point because who knows how long I'll be playing fighting games or how long it'll be around for. But for me, of course, it's personal. It's useful for me, and it will stay useful for me for a long time. But say if I should ever sell any arcade stick I have, then it has a limited amount of growth to it. Same goes for a car. All cars, they are not going to be as good as the day you bought it. And even if you do soup it up with like some nice motors, some speakers, or even give it a whole paint job or whatever, change its look, it's not going to be the same car as when you got it. And even if it looks good, the mileage too, all cars were made to be replaced. There's almost always a new version of a car a year later. So you can already tell cars, as cool and fancy as they are the type of asset that just will cease to be as valuable as it was, especially year after year. And my laptop was the third example. While it is useful for work, I guess in some ways. It's so useful for like communication and doing things I like to do, and it is very productive. There's gonna be a better version of it down the line. On the bottom right corner, it says index funds and investments, and it even points out this is where real wealth is built. That part I will agree on. I will agree on that part that much. And so, what brings me to the main subject of course, why you're here. The real reason you're here is always, of course, is because stocks. What else would it be? So why Costco? Well, firstly, okay, we're here for investing. So by investing, the idea is to buy low and sell high. So of course, if you're going to be buying something up, you want to make sure you'll be getting a good price, right? And that's what the technicals fall into here. But as an investor, you could actually just go based off of price action. And by price action, I mean if you just see a price without having to look at charts too heavily, you could just, buy buy the stock. But there are a few strategies to this. Buying low and selling high. Firstly, on the chart I have here, you can see the levels that I have identified. We can tell that it's primarily for the good part of this year. Let's kind of see both sides actually. Starting off in 2022 here, it kind of fell a bit from the December highs, but it did reach all new highs around spring. But you could see here double topped, and the double top is usually a sign that it's reached a really significant high, but it's ready to drop tremendously, and soon enough it did. It dropped as low as $406, but it's been since climbing back up since around June time to where we are now. But the current market situation has it so that we are where the Feds don't want to admit it, but we are in a recession. You can tell Costco is a pretty good company. It's on a very strong uptrend. They've been around for quite some time, at least since like the 80s, like late 80s, I believe. Costco has been around since about 1985. Okay, so that's a really long time, and you can see just based off of this, no drawings, that it's doing very well. So you can tell it's not going to go anywhere for a while. Usually heavily respects the moving averages, but it's been falling a bit. So I've been using this as an opportunity to start averaging into it again. Basics with investing. You always want to invest in the companies that you probably use, know, and understand how they generate income, keep their business going, So if you're going to put money into a company, you want to know that it's something that you know is doing well. And come on, I've been working for Costco for the last 11 years. So, for me personally, I know Costco. I've been, not only am I an employee, I know how they operate, what their money, membership, that's where their money comes from, but also the constant flow of people that come in and out of the warehouse. I see that firsthand. I'm not on carts. I only have 5 shares of Costco, and I did buy it at $5.34. I've experimented with Costco several times in terms of how to trade it, but I think I've arrived at the best way to just play Costco, since I can't control, I have no control of its movements, honestly, but being able to time its movements is the harder part. So I feel like the only options type of trading that I would ever like to do on it is covered calls. But to get 100 shares of Costco would be literally $50,000, and I don't think that's something I can do right now. But I do have a plan. So since they've been dropping a bit from their all-time high of $612, I figured I wouldn't mind swing trading it. So by swing trade, that means you hold a position, and whether it's a few days or a few months or maybe even, I guess, years, but usually swing trading refers to more than a day, but not more than maybe a few weeks or maybe in a few months. You could swing trade even stuff for years, but at that point it might as well just be an investment. So with investing, of course you want to buy low and sell high, but one good tip with investing is to understand what it means to dollar cost average. Current cost basis is $534.24. So I have that Of my 5 shares, the average of them, must have bought 5 shares at the same time. That's what they are. So if I ever sell below my cost average, then that's absolutely a loss. So the idea is, if you're going to sell any particular stock at a specific point in time, you at least want to be above your cost basis, because if you're selling at it, then you're breaking even. But if you're still above it, well, then you've collected profits. That's great. That's what everyone wants to see. You want your portfolio to grow. You want to become more wealthy, and you only do that by selling after you've profited enough. So my plan for Costco, since my current average is about 534, I want to be able to buy. The next time I buy, I have to buy below. At least that's what I plan on doing. So this was today's price action. It actually dropped as low as $512. So if I had bought another 5 there at that price, or let's say just 512. If I had bought around there, my average would have gone down to 523 for the total of 10 shares. So the more you can bring down your cost average, it's really good for you in the long run. Always understand, you want to stay above. You always want to have the thought of selling above your cost average. Never settle and just sell for low unless you're ready to accept the loss. You always have to see red days as an opportunity. Especially, here's an important message for the newer investors. I think it's really it's cool to see when things are running up in price. So if price of something's going up, of course you want to be a part of that, but you can't always, catch that ride on the way up. That's not the smartest way to do it. You have to be able to appreciate seeing the red days. If you see that your portfolio is down, but then you start buying when it's low, that's the only way you can start buying low. Instead of being able to time the market, you could just visually see, well, the market's red. Maybe I can buy this at a discount. That's what seeing red in the stock market should be. You shouldn't see it as, well, oh no man, I just put in 500 on this today and it's down already. Like, damn, should I sell this? Like, you will see this a lot. We've been so red this entire year. You have to get used to it. So if you're starting as an investor, especially if you're just investing only, then you got to get used to it, because the green will come. Money as a resource, it'll always come back. So that also comes into mind with the stock market. Even though there's days of red, it's not like we're in the worst economic situation ever. There have been worse times. We've made it this far, so the only way is up. And if you ever really do feel in doubt, just zoom out. So that's the current day. But again, this is why we look at the charts. We'll go to, that's the 3-minute. This is the weekly. So we already visited this. We already can tell that Costco is doing well, and remove the drawings. It's just a bit of a hiccup. It'll get back up, but that's why I've chosen my price target as around 600. So while I am holding Costco, I can enjoy maybe a few of its dividends, payouts. We can go ahead and look at when they pay out. Based on this, they are paying out in October, at least based off of the previous history. If I hold my shares up until late October, I'll get paid out in the middle of November. That's how EX dividend days work. Costco pays a dividend of about currently 90 cents. I have a few short-term goals with Costco. I'm going to accumulate about 25 to 33 shares. Now, there's a very specific reason for this. I really truly believe that Costco is due for a stock split, because Amazon, Tesla, Google, even some of my favorite meme stocks, AMC, GME, they all had stock splits this year. Well, Amazon's and Google's were the most significant to me, but Tesla's is also important because I play that stock a lot. And those were, Amazon and Google were literally $2,000 stocks. Tesla, it got as high as 900. No, it got past 1,000 this year, and that had a 3-for-1 split recently. GameStop and AMC, they also had splits. So that's why I feel like this whole year there have been a lot of stock splits. That's why I feel like it's really I really feel Costco's due for one. But that might be my wishful thinking side of things. But in any event, I'm going to try to accumulate 20 to 25 to 33 shares of Costco, and then once I've reached my limit, I'll stop, and then I'll hold on to it until it reaches 600, and then I'll just sell it there. But if they do, for whatever reason, announce their stock splitting, then I will hold it and I will start running covered calls. We'll run the wheel strategy on it, because again, I understand how Costco works, and I've always, I have, like I said, I have invested into it before, but I've offloaded it to take profits. I actually used my profits for selling Costco to buy Google later on, early on this year, I should say. I'll dollar cost average at about 5 shares at a time. I do have a few stocks that I'll be willing to sacrifice for Costco, that are specifically wheel strategy stocks, like my GMEs, my Palantirs, Lucids. I am willing to sacrifice those. I'll let those get called out, and then I'll just put it towards Costco, but I'll keep wheeling them in the meantime. But I will otherwise ultimately just put it into Costco and just dollar cost average. My trick with dollar cost averaging though is I prefer to do it on specifically red days or at support, and then I'll just go ahead and use my technical analysis to determine whether it's a good price. But the easiest way to do that is just, as long as it's below your cost basis, just average down. Even if it goes below the cost average, well then you can say, well, I'll just go lower next time. That's how I do it. And so I'm gonna try and sell it at around 600 or above. Maybe if I really want to hold on to it, then I'll go for about 615. And lastly, I just want to hold it because I think it's a good company and it'll keep my portfolio stable. And then that's typically how you would go about investing into one specific stock. That's how I go about it. The other perks of investing into a specific stock, you'll learn to become familiar with how they move. So like how I've tried playing options on Costco, I've ultimately arrived at they're just best to play on them just by dollar cost averaging into them. I can't always ride my iron condors on them, and who knows how low they'll dip sometimes based on news. So, but I just know overall, in the long run, it's actually a good long-term stock. They do pay a dividend, and I think it'll keep my portfolio rather stable. On Robinhood, you can see when their earnings reports are going to be. So Costco actually does have earnings this month, specifically on September 22nd, after hours. So after the markets close, they announce their earnings report and their guidance for the rest of the year. Usually, you can tell here on their reports they've beaten earnings 1, 2, 3, 4, 5 times they've beaten earnings. So 5 out of 6 isn't bad. So you always want to be aware of what will move the stock, whether it's on the macro level or on just the specific stocks companies level. So always understand, because another thing with earnings is that it will move the stock, whether you like it or not, up or down, especially for these big companies. I mean, unless the news is pretty flat, then that's the only instance where it will leave the stock pretty flat. So that's basic investing. Once you truly understand how investing works, that's when you can start going over into options. I wanted to focus specifically on investing because a lot of people get into stocks, but then they're afraid, or they're just like, I'm afraid I'm gonna lose money. And I think that's totally fine. I mean, when I got in, it was literally at the beginning of the whole meme stock craze. And while a good part of my portfolio does make up of meme stocks, I know how to trade them, and I've been like AMC. I've been trading that on the wheel for. Actually, I haven't sold any of it. I've actually accumulated more, but that just goes to show that I understand the stock as a company. But I understand when big news is going to happen for it, and I'm able to capitalize on that. And that's why I feel like I can hold on to it for a long time. I mean, eventually I will like to sell it. It's just a matter of if they'll ever reach my price targets. But you keep your goals realistic. when you're investing into a company, you have to know they're gonna be in it for the long haul. It can't just be like, oh, my favorite YouTuber told me to buy it, or my uncle told me, hey, I work for this company, yada yada. I mean, I work for this company. I'm not your uncle, but the better you know the company, and if you truly believe in them, then in the long haul, and if you have a good thesis on it, then yeah, go for it. Again, this is not advice to buy, hold, or sell, but I know Costco well enough to know that they're gonna be around for a long time. I mean, did you live through 2020? Did you see how many toilet papers and water bottles that we ran out of? They're recession proof and they're pandemic proof. So always think about that when you start investing into a company. It doesn't have to be Costco. It could be literally anything you like. But if it's something you actually use, whether it's a service or if you buy from them, or if you just know about them and you're using them without even knowing it, then those are the companies you want to invest in. And that's really all it comes down to. Once you really get down investing, you may become more curious as to how you can play the stock differently. Because I don't think all stocks are meant to be invested into, and I think that's where people fall into the bad habit of feeling like they have to invest in everything. Because if you're investing, you're only playing the one side of the market. That's holding for the long term and hoping that it just becomes profitable over time, and that's fine. But you are also missing out on the full spectrum of the stock market, which is I truly believe is through playing options. Because if you have more options, then you're not just limited to just one way of playing. And if you're just investing, that's only one way. So please watch my other videos on how to invest using options. I will work on the covered calls one next. That's next on the list. If you want to earn it, you're going to have to learn it. And in order to get what we desire, you got to jump through the fire. What I mean by that is, this is not going to fall in your lap. You got to work for it. You got to learn it. I have already told you everything that I know up to this point. I might know more by the next year or years from now. But as long as you walk away with something from here and then you start utilizing it on your portfolio, you might even be better at that than me at some point. So, but for right now, use this information for your own good, okay? Catch you guys in the next one.